All right, well, I am really excited for the next speakers. First, a little bit of housekeeping. Mike Connert, who was supposed to be one of the next speakers, couldn't make it. I believe he actually landed in Florida, but then had to, unfortunately, turn around. But we do have a replacement from the company. But I'm really excited about this company because I mentioned that I was bullish on gold and metals. In particular, I'm bullish on silver and copper, and those are two of the metals that our guests will be speaking about. So first, I believe we have Chris Donaldson, who is the executive chairman of Tin One and CEO of Vizsla Copper, and then he'll be followed by Mike Pettengell, the senior vice president of corporate development and strategy for Vizsla Silver.
Great, thank you. There we go. Hi guys, thanks for coming out today. I guess the mantra that I was given was, don't be scared, be prepared. As I found out 30 minutes ago that I was coming up here to chat with you guys also, we may be a little off script for a couple of the slides, but bear with us here. So I'm one of the senior executives with Inventa Capital. Unfortunately, Mike Connert, one of our founders, had an issue with a family tragedy and had to fly back the second he touched down. But we're happy to be here. Thanks for having us, and a shout out to Rick and his team for putting on a fantastic event. I will be making some forward-looking statements, as will the three companies that we're going to talk about today. So if you are going to make an investment, which I encourage you to do, please read this before doing so. So who is Inventa Capital? Inventa Capital is founded by Mike Connert and Craig Perry in 2017. They had the vision at that point when the commodities were really out of favor. Some would argue they're still out of favor today, but we were able to assemble a number of properties and have about 9 different public companies under our umbrella covering the elements that the world needs. Our mission, as it says there, to discover and advance emerging opportunities in the natural resource sector. We believe we are going into an unprecedented opportunity here for the commodities cycle, and are positioning ourselves to really capitalize on that, regardless of which mineral that you particularly like. We've had a track record of success, especially Craig Perry. Many of you may know Craig. He's taken several companies from penny stocks to over $1 billion market cap, ISO Energy, NextGen, Skeena Resources. Our flagship within the umbrella is Vizsla Silver that you'll hear about just shortly. So we have a real track record of taking these smaller companies, navigating during difficult times, and growing them to a point where we're creating tremendous shareholder value. We've raised over $300 million since 2017 and created about $1.5 billion of value for our shareholders. There's an absolute disconnect right now between the need for these critical metals and the appetite to invest in them. And I think many of you know that, which is probably why you're here today. I've been through a couple of cycles now, and I've never seen a setup as it is today. Of course, I've been saying this for a couple of years, and I can't quite understand why it hasn't quite caught up, but we know it's coming. It's just the opportunity to pick the right horse and to back them to create some wealth for yourself and your families. It's difficult as investors. There are too many junior companies out there, and I commend you for coming here. One of the first steps is to listen to people like Rick Rule, who have vetted a number of companies that are here. But it's also incumbent upon you to look at track records of people who have done it before, and not just in a good market where everybody looks pretty smart. It's very difficult when financing is not available to navigate without blowing up your share structure, to position yourself for when the opportunity does arise. Inventa has a solution for that. We have a company in almost every different critical mineral. We have a team of technical people who have analyzed over the last number of years a couple of hundred different projects. We say no 10 times more than we ever say yes to a project. And we position ourselves now to capitalize. We've got Vizsla Silver, which is our flagship. You're going to hear about that today. Silver in Mexico. We've got Tin 1 Resources, which I'll talk about, which is tin and lithium in Australia. We've got Vizsla Copper, which is copper in British Columbia, spin out from Vizsla Silver. Archer Exploration, nickel in Eastern Canada. You've got Kosa Resources, which is uranium exploration, which is really where Craig made the vast majority of his wealth. Targa Exploration, newer company on our basket, which is lithium in Eastern Canada. And then Outback Goldfields, which is searching for gold in arguably the most prolific gold district in the world in Victoria, Australia. Today we're going to talk about three of the companies. We've got Vizsla Silver, which continues just to have success after success. Almost every other week I see a new news release with positive finds, new zones. Mike will talk about that. I'll talk a little bit about Vizsla Copper. We're just emerging. We've just acquired a new project and are starting to drill. And then I'll talk about Tin 1. Nobody knows anything about tin, or very few people do, but I think it's one of the most interesting metals out there. So with that, I'm going to introduce Mike Pettingill. He is the Senior Vice President of Business Strategy and for Vizsla Silver, and I'll let him talk about the success that they've been having so far.
Thanks, Chris. Okay, thanks everyone. So Vizsla Silver, we are a very well-capitalized, aggressive silver explorer, actively advancing a district-scale discovery we've made down in Mexico. We're listed on the NYSE America and the Toronto Venture Exchange under the ticker VZLA. So it's Vizsla's vision to become one of the world's largest single-asset silver primary producers through the exploration and development of our flagship Pánuco district. And we see silver as being an incredibly important metal moving forward. Traditionally, silver has been used, of course, similarly to gold for currency. Obviously, jewelry makes up the largest demand component. But silver is very interesting as it's become much more of an industrial metal as of the last decade or so, particularly with the use of photovoltaics. In fact, we see silver now making up almost 10% of the annual cost base for a photovoltaic cell. We've got lots of rising demand, really owing to the electrification of the planet, either in our EVs, our cell phones, and of course in the photovoltaic industry. And we're already running quite a large deficit of 238 million ounces. It's interesting because at Vizsla, at Pánuco, we've outlined 220 million ounces in the ground in a very, very short time period. So by these numbers, the world needs Pánuco today. And metals, as Chris was touching on, are really starting to coil here. As I mentioned, silver traditionally is the monetary metal, but it's got these industrial applications, particularly focused on the decarbonization and the electrification of the world. It's also that safe haven, with record debt and inflation and a lot of uncertainty on the horizon. It's a safe place. And of course, that supply erosion, as we talked about, is a major factor in this deficit. The bulk of silver still comes as a byproduct from very large deposits, typically open pit deposits, and typically in places in South America that might have challenging jurisdictions. And it's not as easy to get an ESG on your side to be able to actually permit one of these projects, let alone the very high CapEx outlay that's required to put one of these into production. And overall, the market cap of this industry is quite small, at 50 billion US in the entire silver industry. There's royalty companies in the gold space, Franco-Nevada, that trades at almost half of the entire silver industry for market cap. So any inflows that come into this sector can create significant impact. So where will the stable large-scale supply come from? Mexico is the top producer of silver in the world, full stop. It has been for a long time now. It's also home to some of the world's largest silver primary deposits. And we say silver primary, we're just referring to that as the primary metal coming out of that particular deposit. And it's also home to the world's largest silver mining company, Fresnillo. And again, just for context, this is a $6 billion market cap company, and it's one of the largest. So Vizsla's goal, again, is to organically explore, develop, and grow a large silver mining complex in Mexico to help answer that silver supply question. Bank of America came out with a report, it would have been a few months back now, that highlighted out of all of the critical metals required for the electrification of the planet, silver would run the largest deficit by the year 2030. It's 130% from current levels. The next closest metal is lithium at 60% by the year 2030. And the largest demand driver for silver, yet again, is photovoltaics. So when you look at a couple of our real peer comparables here, Silvercrest and Mag Silver, these are two single asset silver primary producers in Mexico. They are trading north of $1 billion valuations. You can see there's a discovery phase, and then there's a bit of a de-risking phase where the stock kind of levels out. But then as it's continued to be de-risked through technical studies and ongoing resources, and the project is put into production, there's a 4 to 5x minimum that you can expect. So we do have this standout discovery. It does represent one of the largest and highest grade undeveloped silver stories in the planet. Excellent management team and board with over 185 years of combined experience, really covering all facets of the mining industry, capital markets, exploration, development. As I mentioned, we are an aggressive, low-cost explorer. In fact, we are the world's most aggressive silver explorer. We're drilling 90,000 meters this year. Last year, we completed 125,000 meters, and the year prior was 100,000 meters. We've got 7 drill rigs spinning currently. We've completed about 50% of this year's drill campaign. All of that will feed into a resource update here by the end of the year. Subsequent to that, we'll put out our initial PEA sometime in early 2024. And we're well positioned to execute. We own this large district 100% outright, have around 48 million Canadian in the bank with 0 debt. So the project itself, excellent infrastructure. You see 2 highways that run right through the property. We're located in the state of Sinaloa, Mexico, about an hour drive from the coastal city of Mazatlan. These 2 highways, not only do they add security, but high tension power runs parallel. So we're in an excellent way as far as our infrastructure. This district, it's important to note, it's a historic district. The discovery dates back all the way to the conquistadors, but it's never been actually consolidated and systematically explored or exploited on any mechanized basis. Any sort of historic production came from, essentially artisanal mining that was all optical. They would find the shiny veins, mine them. When they lost them, they would walk away. This is reminiscent to First Majestic's flagship San Dimas mine. It's located about 80 kilometers to the north in Durango. This mine, in context, has been in commercial production for over 100 years. It still does around 12.5 million ounces of silver production per year. The key difference, 100 years of commercial production produced just around 1 billion ounces of silver equivalent over that time period. With Pánuco, 0 years of commercial production. So that's the prize that we're skating towards here. Very large district, about the size of the island of Manhattan, so you're 14 kilometers long by around 7 kilometers wide. And the bulk of our resource really just sits right in that southwest corner. You can think our resource sits in the financial district, and we've got all of Midtown, all of Central Park and beyond to continue exploring. And in fact, we've got around 86 kilometers of known, mapped, and sampled veins. And where our resource sits is only on less than 10% of that. So I won't get into all these numbers. It's a pretty ugly slide, but the important takeaways here, we have 9 veins that went into this resource. Every single one is right at surface, and they're all open laterally and at depth. And this keeps our drilling costs incredibly low. In fact, you can see here at the bottom, all-in exploration costs at 19 cents per ounce. So we're finding ounces at 19 cents. In fact, every ounce we discovered since our maiden resource, which we put out in March of last year, we're clocking in at 15 cents per ounce. So very, very capital efficient at the drill bit. This is to just show our size, grade, and scale here. We're comparing to a few of the producers, as mentioned, Mag Silver and Silvercrest. Those are those two comparables we like to highlight. Very high-grade profiles. But when you look at us, and I don't know if the pointer really, you can see us right here. We're smack dab in the middle in terms of size, right? And it's important to note this is coming after less than 3 years of drilling. And you can see the average resource grade in Mexico is sub 200 grams per ton. So we have an excellent grade profile, and we're just getting started. The key structure for us, our largest structure, hosts about half of our global resource, so over 100 million ounces are contained right here, is the Copala structure. And this structure, it bucks the trend of what we really see in Mexico. Typically, these subvertical structures, they could be 2 meters wide on average. This structure is got a nice gentle plunge to it, but it's 10 meters wide, or 33 feet on average. And that's why we have 4 of our 7 drill rigs positioned here. We continue to expand laterally. Again, very cost effective. The last press release you would have seen come out from us last week was on Copala, further expanding it. The strike length that you see, or the lateral extent you see here, is around 950 meters. We've now expanded it to almost 1.7 kilometers in total strike. So again, we've got a large, high-grade resource that we've delineated in a very rapid time frame. We've completed initial metallurgy to de-risk the project on 2 of our main structures. The Copala Met will be coming out shortly. We do own 100% of this district outright. And we're focused on conversion of the resources to higher confidence categories, as well as adding more to that resource base as we look to take this project into production. In doing so, we've also done a lot of that background work, like baseline environmental and, of course, the geotech and hydro studies. So again, those next steps are resource update here in the tail end of the year, and then, of course, into the initial economics in the form of a PEA. So quickly, just to show you some of our re-rate potential yet again, if we look at things on an EV per ounce perspective, you can see here where we, you can see here where we sit right in the middle, but our grade is head and shoulders above our peer group. We would love to highlight margin here, but we don't have the economics yet, so grade will have to suffice for today. But this is where we're heading. The direct comparables that trade typically at an average of over $6. And as we de-risk, as we get into production, that's exactly what we're hunting. And if you subscribe to that, well, there's a significant re-rate on the horizon as well. Again, these companies typically, these are US dollars, they typically trade north of $1 billion valuation. So company snapshot, we have about 207 million shares outstanding. We do have some warrants out, but again, no debt, 48 million cash in the bank. We've got very strong analyst coverage. Consensus is around, it's over 100% return to market, around $3.40 Canadian. And we've strong institutional shareholders, some very strong shareholders that have been with us since the beginning. So the near-term catalysts, again, are the discovery potential coming from this 90,000 meter drill program, and of course, that updated resource coming in the back end of this year. We do have significant discovery potential beyond what we're doing just today, with only 43 out of 160 targets actually being drill tested. In fact, we're finding targets much faster than we can drill them. And we do have this expedited pathway given the brownfields nature of this district. So the existing operating infrastructure really provides a leg up as we look to develop. And of course, we're well funded for the next 18 months of ongoing exploration and development. So it's an excellent project. This is what an exploration story that is successful looks like. We can get into a lot more detail if you want to come by the booth 32. But I'll pass it over to Chris here to talk about Vizsla Copper, the spin-out of our copper assets to focus primarily on this very large silver district. Thank you.
Go ahead. All right, thanks, Mike, for that. We get the next slide. Coming? Oh, okay, there we go. Okay, Vizsla Copper, as the name might suggest, we're a spin-out from Vizsla Silver. Vizsla Silver had some copper assets that were non-core to them in British Columbia. So we spun those out. Shareholders of Vizsla Silver became shareholders of Vizsla Copper. Spent about a year and a half analyzing various projects, and just in December of last year, we made what was a transformational acquisition for us. We merged with a company called Consolidated Woodjam and acquired the Woodjam Project, which is in British Columbia, and in a fantastic district that is littered with other copper mines. We're just getting going now. We started our first drill program about 3 weeks ago. We got financed, and we're now kind of rolling. Today I'll talk a little bit about the outlook for copper and why we are so excited about this particular project. First of all and foremost, we're absolute copper bulls. I think you'd be hard-pressed to find any study that doesn't have a positive outlook for copper over the next decade. Certainly not a straight line. Again, I've been talking about this for a couple of years, but the fundamentals are such there simply is not enough copper being produced. There's not enough pipeline of new projects to supply the world with copper. And, that's coming to a head. We're starting to see a pretty good appreciation in the copper price, but we still aren't at the all-time highs that we saw in 2013. I think we're going to see $10 plus copper at some point in the next few years. And it's incumbent upon you and us to position ourselves to take advantage of that opportunity. The Woodjam Project is in central British Columbia. It's in an area that is fairly flat. It's an area that you can mine in almost all year round, with the exception of breakup about once or a month on either side of the winter. It's an area that is accessible by forestry roads. So for us, it's an absolute perfect place to be looking for copper. The history on the project was that it was owned by Goldfields up until 2013. Goldfields is a major, actually was primarily a gold company. It was the last exploration project that they got rid of when they had a mandate to divest in non-core assets. So for the last 10 years, it's been held in a junior company with some very, very intelligent geologists who may not have had as much experience on the marketing side. So they've done a number of programs, but a few $100,000 every year just to keep the programs advancing. It's a large property package. I think we're up to 75,000 hectares. We've been, over the last 6 months, we've been assembling more land to give us a dominant position. Only 10% of the property has been explored to date. Goldfields had spent $30 million and 120,000 meters of drilling on the project up until 2013. And it really laid kind of dormant. It took us a long time to convince these guys to partner with us and part with the project. But we're happy we've acquired it. And as I said, we're just getting going on our operations right now. It has a historical resource on it of almost 2 billion pounds of copper and 1 million ounces of gold. The bit of drilling in the last 10 years is not included in that. And since that time, they've had some phenomenal results. You see some of the intercepts that are listed there, 110 meters at 2.5 grams gold, almost 0.5% copper. None of those are included in that resource. That was done in 2013 by Goldfield. So we'll drill this program and then look to potentially update that resource with these higher grade hits that we've had, and then whatever we discover in this campaign. So this campaign we just raised $6 million. 4 of that is what they call flow through, so it's designated for exploration drilling. So we're funded for this campaign. Our plan is to do 8,000 meters, and the goal is kind of twofold. One is to hit some of these known zones that we have, these high-grade zones. The structure of the area, it's a series of what we'll call pencil porphyries, so high-grade cores, and there's a number of them. So there's 3 known zones that we're going to test the extensions on. So very high probability we'll get some good results on these known zones. But we've also just done what they call a ZTEM survey. And unbelievably, we've identified over 100 different potential targets. So it's a real challenge for us right now to rank and prioritize those targets, and then decide which ones to drill off on that. So half the drilling will be on the known zones and those extensions, and then hopefully we'll be able to find some new zones with the back half of the drilling. We've already done a few holes. We've sent the first bit of core off for assaying. So our first results should be 6 to 8 weeks from now. We're just starting to market. I think this is one of our first times we've actually come out and had a booth and started to get the story out there. So our plan is very simple. One, refresh the story that was quite well known a decade ago when Goldfields owned it. Review the data that we've had and compile all of that. Rank and prioritize the new targets that we've just identified from that ZTEM survey, and then hopefully get some success with the drilling right now. It's a fantastic time to get into the story. We're just getting going, and of course this is all on the backdrop of what we believe is going to be the most bullish case for any commodity out there, and that's copper. So that's Vizsla Copper. The only thing I like more than copper is tin. So I'm going to talk a little bit about tin one. And every time I talk about tin, it's not a commodity that's well followed in North America. The reason for that is there are no primary tin producers in North America. If I go to Europe or down to Australia, much better known. Tin One's public company, TORC on the TSX Venture, TORCF on the OTC QB. That's a picture. We were down in Tasmania, Australia, which is where these projects are, about 4 months ago, and was able to take a picture from site. I'm going to talk about our assets, which are primarily in Tasmania. For those who don't know, Tasmania is a state just south of the mainland of Australia. It's about an hour's flight from Sydney and or Melbourne. These projects that we have, and I'm going to focus on 2 of them, have not advanced like many projects around the world since the 80s. In the 80s, the tin price collapsed, and projects around the world absolutely shuttered. And it hasn't been for until the last couple of years that you're starting to see restarts of some of these projects. You couldn't be in a better jurisdiction than Tasmania. It's a tin producing state. It's a small island. The second biggest tin mine in the world is in Tasmania. And we have got what is the dominant land position in northeast Tasmania. There's a whole thematic for these critical metals right now, and tin is very much a critical metal. We also have recently made a lithium find as well. So there's kind of 2 parts to this story, which I'll talk about. We got into this project because 5 years ago we read a study put forward by MIT and promoted heavily by Rio Tinto that identified tin as the metal that is going to be most impacted by the electrification of the world. Interesting to note, lithium was number 2. Those are the 2 elements that we have in tin one. Nobody cared about tin 5 years ago. We were able to pick up these projects for almost nothing. Nobody cared about tin until a year ago, when it hit an all-time high of 50,000 per ton. I can't express to you enough how small the market is for tin. There are literally 10 explorer developers in this space. I know that because we joined the International Tin Association, we were the 10th explorer developer to join. So if you take anything away from today, know that we are a top 10 tin explorer or developer. Okay. But there are only about 10 producers as well. It's a very, very small market, but the backdrop is actually very similar to copper, just a lot smaller. So anybody looking for tin exposure, when that does happen, like we saw a year ago when the tin price went up, all boats lift just because there's such a few companies that are in this space. The main demand driver for tin is solder. So it's the glue that holds batteries and semiconductors together. Over half of the use is in solder. Most people think it's tin cans, but it's definitely solder that is really driving the market, and China drives the market. What's interesting though is that you can look at almost every study and it says 2 to 4% increase of tin for the next decade and beyond. But what you need to watch for, especially in the next 6 months, is what's happening on the supply side. 80% of the world's tin comes from China, Myanmar, Indonesia, or the DRC. Okay? There's a huge narrative right now to supply tin to Western countries from Western jurisdictions, which is why you're seeing restarts in places like Australia and Europe of projects like ours. The two key things to watch for are what happened in Myanmar and Indonesia. Myanmar, high grade, has been supplying 95% of their tin to China over the last decade, but they're running out of it. They've made an announcement that at the end of this month, so next week, they are halting all exports and exploration in WA state, WA state. That represents 10% of world production. So we saw a mine called Mincer in January, February, go offline for 3 months. The price of tin went from 17,000 a ton to almost 30,000, almost doubled because of that factor. So this is 10% that's going to start in August. More importantly, Myanmar has just made an announcement that at the back half of this year, they're curbing their exports of tin. They represent 20 to 25% of world production. They did this in the nickel market a few years ago. What they're trying to do is attract investment for smelters and have a vertical within the country. So you've got Myanmar, which is 10%, Indonesia, 25%. That's potentially 35% of the world's production of tin that is at jeopardy. Nobody cares about the price of tin. As an end user, you've got your cell phone, you might have 40 cents a tin in your cell phone. If it triples, it goes to $1.20, you're probably not going back to a landline, right? But it has a huge effect for producers and developers like us. So something to really watch for in the next 6 months. We're seeing some weak demand out of China right now, so it's certainly not going to be a straight line. But that weak demand in the short term is way more than offset by the potential supply disruptions that are coming up. It's a very interesting market to follow. Very quickly, we have two narratives that are going. One, Great Pyramid. It's a project, very, very simple tin project, had a historical resource on it. We drilled it out last year with 3 goals. Test at depth, test for mineralization laterally, and prove out the historical resource. Hit on all of our goals. We're now updating that resource, and we'll have that out in the next couple months, so by the end of the summer. The second project we have at Aberfoyle. Aberfoyle is about 20 minutes up the road. It's a past-producing tin and tungsten district, produced over 2 million tons of tin and tungsten. We did some modern exploration on it, did some multi-element testing, and by luck, we found lithium. Now, we were not trying to get into the lithium game. We're a tin company, but it's something we couldn't deny. We've now found out that there's majors staking land in and around us. We, by coincidence, have the dominant land position of lithium micas in Tasmania. So if you look at our company right now, we're doing sampling and following up to see if we have a potential district play for lithium. If we do, you could not be in a better location. On a past producing mine district in the #1 lithium producer in the world, in an area that has all the infrastructure and is zoned for future commercial production. So when you're looking at tin one, we've got two narratives. One, the tin case, which is really where we're creating value. Every bit of money and drill that we put into the ground, we're growing that resource, and when the time is right, we'll be able to capitalize on the market. And then we've got a bit of a lottery ticket, is the way I look at it on the lithium side. If we can change this from what is now a find, it's early days, into a discovery, which we hope to drill at the back end of this year. We're a $10 million market cap. We're going to be many, many multiples of that. So please follow along. It's going to be an exciting year. I know a lot of people don't follow the tin space, but it's going to be quite interesting. We've got the team that has done it before, and we certainly have the right properties in the right areas. So I want to thank you guys all for taking the time to listen to our three companies that we have today. I was told that we have a breakout session at 4:10 in Salon J. And we're also at booth 32. Love to chat with you and expand on anything that you saw today. So thank you, and thank you, Rick, for having us out. Take care.